Okay. One of the world's largest economies in the world, a $4.5 trillion giant, is flipping pro-Bitcoin. With their economy in shambles and a precursor to what America's economic future could be, Japan is about to make a big splash, effectively ending their ban on banks custodying Bitcoin. While this is a greater trend of countries wanting to hold Bitcoin, don't fall for the trap. We'll break it all down for you in this video. Let's dive in. All right, guys. It looks like I'm streaming through OBS. So one's in the chat if I'm actually live, because our normal streaming software isn't working. But I think we're live. So let me get everyone over from Rumble. Anyways. Man, so I'm gonna have to do this live, guys. I'm gonna have to do everything live. Oops, wrong one. Here, I'm going to just read it because, again, we're not using our normal streaming software. AWS took everything down, but I'm over here on Yahoo Finance. So the big news is Japan's banks, this is the headline, Japan's banks may soon hold Bitcoin. And I'm going to read a little bit here. So Japan's financial landscape is transforming digitally. The Financial Services Agency, the FSA, has begun considering regulatory reforms permitting domestic banks to acquire and hold non-backed crypto assets such as Bitcoin for investment. In addition, 3 of the largest banking groups are pursuing a plan to issue yen-peg stablecoins jointly. And the reason I think this is kind of a big news is, one, like I said to start off the show, historically, their guidelines were revised in 2020, effectively banning or barring the banks from acquiring crypto assets for investment, citing, quote, extreme volatility concerns. Now, of course, things have updated and things are working differently now. Let's see. Okay. All right, cool. I am live. Okay. So now they're switching this up. Obviously, I think the biggest thing going on right now is essentially, of course, the Trump administration saying that they want to go Bitcoin. And now it seems like every nation state around the world is following this lead here. So the interesting part is, of course, another nation state coming in, I would say a global player here in the economic landscape. And even though they kind of stepped back away from Bitcoin for a little bit, now they're revising whether they're going to allow people to go into Bitcoin, obviously, because now it's a lot safer. You know, all of the concerns for the most part have been taken away, and now everyone is scrambling to get into position here to make sure that their, banks, their country, their citizens can get into Bitcoin in a safe way. Now, I do have a whole rabbit hole later on in regards to whether these institutions coming into Bitcoin are a good thing or not. I'll break that down in the culture later. But first and foremost, I wish, actually, here, let me try to get this going for you guys, because I do need to screen share a little bit here for you. So I'm doing this live, guys. I'm getting this set up live for you so that we can see this stuff. All right. Well, this is a new setup here. Okay. So here we go. The reason I want to screen share real quick is because we are seeing a lot of interesting stuff come out of Japan. Now, this chart right here, I'm going to go in order here. Obviously, I've been telling you guys for a while that what we're seeing in Japan is very interesting, because essentially what Japan did was what we are currently doing. They're just ahead of the curve here. They got really high, debt to GDP ratios, and we're starting to see cracks in the bond markets over there. Now, they are seemingly getting this kind of together. They are potentially getting things in order. At least that's what they're trying to make people believe. But in the last couple of weeks, we've been seeing some very interesting stuff. And here's a tweet from Global Markets, and it goes, here we go again in Japan. Japan's 20-year government bond yield hit its highest since 1999. The 30-year JGB yield reached its highest since debuting in 1999. And the 40-year Japanese government bond yield is now near its highest since debuting in 2007. The world's 3rd largest bond market is breaking. From fiat currencies, they're starting to look away from treasuries, and they're looking for alternatives. Obviously, we've seen what's happened with gold. Gold is the hottest trade right now. It did have a little correction. It seemed to have, kind of popped up this morning. So I don't think the gold run is necessarily over, and I do have a good clip from Luke Gromen that I'm going to play in the numbers in a minute that essentially show you what we think is going on. And so, again, I do think these things are interrelated because, again, further, what we just heard from the Federal Reserve and Jay Powell last week is the same thing that we're hearing from Japan. The Bank of Japan's balance sheet is shrinking, and it's accelerating. Total assets are down, and since the March 2024 peak, assets have fallen roughly $407 billion or 8.1%. To put this into perspective, the Bank of Japan total's assets to GDP ratio still stands above 110%, which is usually that concerning. I believe they're still around 200-something%. But anyways, the Japan era of ultra-loose monetary policy is over. And this is why I think these things are connected, is because as we're seeing the bond market struggle, I mean, Sophie was telling me earlier they're about to, and I did fact check this, Sophie, they haven't elected a new prime minister, but they seemingly are going to elect their first female prime minister tomorrow. I think they're doing
oh, I thought she already won.
No, she's on the verge of winning, but I think tomorrow is like the official day. Anyways, and Sophie will get into her conspiracy theory in a minute on that. But you are starting to see people don't want treasuries, and now they got to look for alternatives. Obviously, gold is one of the main alternatives, and now we're starting to see Bitcoin play a role in that global market. Everyone's looking for, hey, you might just need to have a little bit of Bitcoin in your balance sheet somewhere. So I think these two things are one in the same. They are, I believe, playing out kind of in tandem here, because if you are starting to see struggles with your treasury market, and then of course what's going on in the gold market, I did show you guys this on Friday. The gold priced in Japanese yen is exploding 300% since 2020. It's basically going parabolic right now. So we're seeing this trend of global currencies, all currencies around the world, are potentially in this hyperinflationary scenario. Now, I don't think we are there, but they are starting to lose against gold. They're getting debased in real time. And so people are concerned about this. They're looking for alternatives. And so I don't think it's a coincidence. Uh-oh, my camera is all weird. I don't think it's a coincidence that we are seeing Japan essentially about to elect a new prime minister. And at the same time, their banks are arguing whether they should allow their banks to custody Bitcoin. Now, that, I think, is an interesting geopolitical game theory going on. Of course, it started with the Trump administration. Now we're seeing this trickle into all economies here. And before I get into kind of my further conspiracy theories about we shouldn't be trusting the banks here, the reason I and everyone watches Japan is because Japan's essentially like the global nation-state hedge fund. You could get really cheap capital coming from Japan. You get basically really low interest rates. That's where all the money flows. They're essentially what we would consider where the U.S. is going to be in a few years. That's always been the concern. And one of my favorite Bitcoin conspiracies is that this is why Satoshi Nakamoto took the pseudonym of Satoshi Nakamoto. It was basically to show the U.S., hey, if you don't figure this out, you're going to become Japan. And as we're seeing now, we're finally seeing the Japan kind of economy implode. I know there's a lot of struggling going on over there, and now the bond market's exploding, but Japan has essentially been the Keynesian, MMT theorist, like, perfect example of like, hey guys, we can run our debt super high. The GDP to debt ratios can be extremely high. And look at Japan, they're doing so well. Well, I think finally, the reality is starting to set in. And we're seeing problems in Japan. And so the two things together, I think, are very interesting, especially now that they are looking at all of the assets out there. They're looking at all the markets and they're like, actually, I think we need to allow our banks to custody Bitcoin. I think it's time where we stop banning our banks from custodying Bitcoin. We essentially have to get into the game here, or else we're going to be left in the dust. So that's my first take. So I'll pass it over to you while I do some technical stuff over here to make sure it looks good moving forward. But what's your thoughts on Japan going in, and then I'll kind of get into my conspiracies here.
I mean, I think it just goes to show that this liquidity shortage, this liquidity shock that is imminent is not just happening in the US, but it's happening to the biggest foreign holder of US bonds and treasuries. And so if they're, you know, and Japan, I would say, is like a relatively like conservative culture. So I wouldn't doubt that they treat their economic system very conservatively as well. If they are lifting restrictions on Bitcoin and crypto as a whole, what does that say about the system that we're on right now? Is it telling you that, you know, maybe bonds and treasuries aren't as reliable? Is it saying that, you know, maybe we need to be going into a hard asset that is easily divisible and easily transportable, not and has a capped supply with absolute scarcity? I think those are all of the questions that they are asking themselves, and I don't think that it's really I don't think it's a coincidence that it's happening when Japan is about to elect a very conservative prime minister. And why do I say that? Because historically, and you know, this isn't about left or right, like I don't really care, I'm team Bitcoin. But historically, from what we've seen on our side of the pond, I know that we say that in reference to the UK, but whatever, like we're separated by the Pacific, or on our side of the ocean. We've seen Prime Minister 2 weeks after she takes office, and I'm sure that they're going to be conversing about how to stabilize the economy, because it's like you said, Japan is a couple of years ahead in terms of technology and in terms of economic moves. So they will probably get in sync about how to better, you know, figure out what it is that's coming, because we don't know, they know. But if they're making these moves, they're definitely preparing for something big that is to come, in my opinion.
Yeah, I think that's kind of the big move. Obviously, guys, we're seeing what's going on in the gold market, and as a Bitcoiner, that's telling you a lot of stuff going on in just the global sentiment right now. People do not want currencies right now. They do not want treasuries. The U.S. government and basically every government right now is trying to incentivize people to buy treasuries any way possible. They're basically losing control of the system, though this could take a lot longer than us Bitcoiners imagine. But they're essentially realizing that the old levers aren't working like they used to, and they need to find a new solution, which is, of course, Bitcoin. Now,
I think at the very least, people are feeling FOMO. And they are FOMOing into gold. And the only reason I say this is because I've seen it happen with family friends where, you know, everybody gets the call when Bitcoin is at all-time high. Hey, can you talk to me about this Bitcoin thing? Like, it's literally a meme at this point. So that same psychology, you could just apply it to gold. People are watching it go at all-time high, reading these headlines saying, wow, if everybody else is leaning into gold and it's going at all-time high, there's these queues forming around buildings for people to purchase gold, maybe I should get myself a little bit. And, you know, you got to study what has happened in the past. What happens right before, you know, during a bull market when there is this peak in the price of gold? What happens to Bitcoin? It usually historically has followed, and I think that we're seeing the perfect setup with many institutions, governments especially, now lifting these restrictions, whereas before we were seen as, you know, basically pirates and scammers, and saying that like this Bitcoin thing is like, you're gonna get scammed. I remember getting lectured by someone at Pilates about that. It was
the yoga teacher definitely knows.
It was so embarrassing for them. But you know, if all of these obstacles are moving out of the way, it seems like, you know, history doesn't repeat itself, but it rhymes, and I feel like this is history rhyming. I feel like these, you know, instead of it being Iran in the past and Lebanon in the past, El Salvador, countries that, you know, you might say were still developing or were in turmoil and needed Bitcoin to save them, you are seeing countries like Japan and the United States adopt and embrace Bitcoin and say, okay, we're going to let the institutional money come in now. And think about the ramifications that it has. People like you and me, like, we're just trying to become whole coiners, and we, you know, famously say on Simply Bitcoin, how much Bitcoin do you need to retire? And it's literally like 0.1 Bitcoin. And that number may be getting smaller over time. We don't know. But the way that the moves that these institutions are making and the amount of liquidity that is coming and will pour into Bitcoin if, you know, certain, you know, things happen. I'm not a fortune teller, so I can't really tell you what those things will be. I'm just saying that the global stage and the institutions are setting up for it, and it looks like the interest is there. They're all over the headlines. They're all over their balance sheets. BlackRock, you know, their IBIT ETF is #1 on their balance sheet. So I think a lot of important wealthy institutions are taking note of that, and they are following suit.
Yeah, 100%. I mean, it's all the rage right now. Obviously, ever since Larry Fink got in and Trump got in, you're starting to see the pivot into Bitcoin and obviously stablecoins. And there's a good question in here. Is it? This is by Nico DG1VF. I can't pull you up right now because our normal streaming software is acting up. But he goes, is it possible they just want to create their own stablecoin? Yes, 100%. And I think that is kind of the greater trend right now is they're not necessarily going all the way into Bitcoin. Yes, they're going to allow their banks to potentially start to custody Bitcoin. But a lot of these nation states and the rulers right now and the people at the top are essentially thinking they could stop the demise of fiat currencies by going into stablecoins. From our perspective, stablecoins basically fiat currency. They're not going to save themselves via a stablecoin. But this is obviously why they are, you know, tacitly embracing Bitcoin, is because if they embrace Bitcoin, then obviously they can kind of type a facade, and they're like, we just want to drop a CBDC on you guys. Trust us, it's going to be better for your payments. Obviously, we know better than that. Anyways, guys.
We're lagging.
Yeah, this show is going to be a little different than usual. It looks, I don't know if it's this whole AWS that's messing with YouTube as well. Yeah, so look.
It's Bezos, blame him.
Yeah, so hey, look. Today's show might be a little shorter than usual. I'm going to try to keep this going as normal. But hey, strange times here. But of course, before we keep going, I do want to remind you guys to like the show, comment on this video. Tell us how you think we're doing here. Do you like the show? What can we improve? Do you like the new studio? And of course, hit the subscribe button if it lets you. If it lets you, hit the subscribe button, And of course, we do have to give a shout out to our boys over at Bitcoin Well. Go to bitcoinwell.com/simply and make sure you are stacking Bitcoin the right way. And by that, we mean you do not leave your Bitcoin on an exchange. And this is why we partnered with Bitcoin Well, is because once your money goes through, the Bitcoin gets sent directly to your cold storage. They have never lost Bitcoin. They will never lose Bitcoin because they never hold your Bitcoin. Again, go to bitcoinwell.com/simply. And when you sign up, you get 3 chances to win 1 million sats, which is, I don't even know what that is now. It's like $1,000+ or something like that. Anyways, guys, let me keep it moving and hopefully nothing else crashes on us.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates. Instead of just writing them down on paper, paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, guys, we are back. I think, dude, I'm literally on the fly learning how to use OBS to do the show like we normally do it. So forgive me. Hopefully that worked.
Opti's a professional.
Dude.
Smash the like if you think Opti's a professional.
Yo.
He's killing it. Honestly, I was like, what are we gonna do? What are we gonna do?
Yeah, I had to literally make the stream work very last minute because Restream stopped working. But anyways, let's keep this moving. So we're over here on Clock Moody's dashboard. The current Bitcoin price is $111,000 and $111.20. A decline from all-time high of -12. A market cap of 2.21 trillion, and the current block height 919,968. All right, guys.
In other news, guys, Bitcoin is now a stable coin. Everyone go have fun.
Yeah, it's a stable coin, guys. The bull run's over. Now, actually,
you know,
I'm kind of bullish.
This might be why Japan is like, okay, we might feel comfortable. I'm telling you, the stability, the sideways action, I call it stability because I'm a woman, but like this like boring sideways action that we're getting, it might be the reason that governments and institutions are finally like, okay, well, maybe we can buy some of this stuff. Maybe it isn't for scammers. Maybe it's actually a legit thing. I don't know.
Yeah, the volatility is down, which this is why they're getting comfortable with it. And I'm getting bored over here. But honestly, it was nice to see the price kind of respond over the weekend. I know everyone was kind of saying it was over. And then I came on.
In my heart, it was over.
Yeah, I came on Friday and I was like, guys, I don't think it's over. And hey, look, the Opti macro TAing did well. Okay, guys, so I got this clip of Luke Gromen, sorry. And he was on TFTC, and he was talking about gold and the dollar. And I think it's perfectly explaining where we are right now. Now, I really hope this works. I just set it up, so forgive. We're doing it live. Let's see.
Gold is how you get out of the dollar system. And that's why a friend of another said all those years ago, when you see them go up together, that means the dollar is coming to its end of life. This present form of this dollar system is coming to the end of life. Now, does it mean the dollar is going to die? No. I'll be using dollars, and your and my grandkids and great grandkids will still be using dollars. It's just going to buy us a lot less, and certainly in gold terms. De facto, we can see gold with today's price move has overtaken treasuries in global central bank reserves. Right, so there's now more gold in global central bank reserves than there are U.S. treasuries. How do you sit there and argue and say it's not overtaking the dollar in the system? To me, that's crazy. Now, will people still use dollars? Of course. Why? That's just Gresham's law, right? I hear people say, well, it's still dominant. 90% of currency usage, that's dollar dominance. Great. So you're spending, you're telling me it's the bad currency, right? I'll spend dollars all day long because there's a terrible store of value. But if the whole change of structure we've been talking about for years, and I mean, if you look at all my posts, all my podcasts, everything I've ever said, I've never said end of dollar reserve status. It's end of the post-71 structure of dollar reserve status, which is dollar as primary reserve currency, treasury bond as primary reserve asset. It happened. It's happened. The dollar is still primary reserve currency, but gold is now primary reserve asset as of probably this morning with the $100 move. And I don't think it's ever going back unless,
Restart it in my streaming software. Okay.
We're
All right, guys. I don't know what is going on over here, but Hopefully you caught that clip. Anyways, the short of it, the reason I wanted to play that on today's show is because we are seeing what's going on in the gold market. Now, everyone is looking at the gold market, and if you're not really I'm not going to call myself a seasoned trader here, but if you're not coming from a hard money perspective, you're probably looking at gold and you're just thinking, oh, I can go to gold, I can get gains there. You know, gold is going parabolic. You know, I'm making money in gold if I just buy some gold right now. And as we've been covering, there does look like the retail that's chasing gold right now is the exit liquidity because they don't understand the fundamentals of what is happening. And there's a few things that Luke Gromen said. One, I think he's 100% spot on with what he said about we're starting to see treasuries essentially become no longer the world reserve asset. Yes, the dollar is still the world's currency, but gold has fundamentally retaken that position as the world store of value world store of value. As we saw, the banks now hold a higher rate of gold than they do of treasuries, which hasn't happened basically in my lifetime. And we're starting to see that this, quote, debasement trade is taking off, that people are starting to worry about their currency being debased. And he did mention one interesting thing about when you see the dollar and gold rise at the same time, it's showing you something in the system. Now, I'm going to pull over here to TradingView. I did a simple US dollar index, which is of course the strength of the dollar compared to the price of Bitcoin. Now, if I zoom out a little bit, you do see kind of an inverse correlation here that when gold goes up, usually the Dixie goes down, or vice versa. When Dixie goes up, gold goes down. They're basically showing you the same thing, the strength of the dollar. And then what we're seeing right now is obviously completely different. Because as the dollar Dixie goes down, obviously gold goes up. And then you see this little, as the gold price goes down, dollar Dixie goes up. But now we've gotten to a point where, yes, gold is ripping and Dixie has gone down, but it kind of bottomed out here. And actually this morning you can see it started to rip. It is kind of correcting a little bit. So I think what Luke Gromen's been saying is absolutely spot on, that we are seeing, as a lot of Bitcoiners have been talking about, this monetary reset happen in real time. The world is moving away from treasuries and dollars as a reserve store of value. That's usually the safest bet, is to buy government debt. Right now, they're doing whatever they can to incentivize people to buy treasuries, but most people that are in the market do not have faith in getting returns on long-term treasury returns or treasury interest rates. And so we're seeing everyone pile into gold. And this is being driven by, I think, a couple of factors. One, of course, retail speculating on it. They just want to make dollars. But two, it's obviously central banks are now acquiring gold at rates we haven't seen before. And then the institutional investors also piling into gold. And so even if we don't see a gold correction right now, which is, in my opinion, going to be extremely bullish for Bitcoin, but if we continue to see gold rip higher than we've ever seen before, and it goes to $5,000 per ounce, like Luke was saying, that's going to show us that there is some fundamental issues going on in the system, and most people are either going to be too late to this trade, or they're just going to be kind of chasing the gains here and not be in a very good position to maintain their purchasing power, or rather to basically beat the hurdle rate that is Bitcoin. Now, I did read a really good newsletter from James Lavish over the weekend, and he broke all this down of what's going on from the Fed. The Fed's basically saying that they're going to end quantitative tightening soon. What's going on with secured overnight funding rates, Federal Reserve funding rates, and it's basically telling you that there is some kind of cracks going on in the system. The system is losing liquidity, and so that to continue and maintain the status that we have, it all leads to one thing. They have to turn on the money printers. They need to provide new liquidity for the system. And James Lavish was essentially saying there's two things you want to hold. Obviously Bitcoin, but he's also holding some gold. But he's saying since Bitcoin is a smaller market cap, it's going to run way higher. And if we learned anything from gold this year, is that it doesn't matter the market cap of the asset. It matters how much people want to get into it. Gold's been rallying. It's been adding literally multiples of Bitcoin's market cap. And you think Bitcoin can't pump just as hard if people realize that they need to hold some Bitcoin? I think we are totally underestimating where this is going. And it keeps leading me back to two things. One, 2026 might not be a down year. And two, I think, what's everyone asking in the chat, 200K by end of year? I think it's still in play, guys. I think it's still in play considering we are essentially in a new macro landscape. We are in uncharted waters right now. And every Bitcoiner, including us, every Bitcoiner that thinks they know what's going to happen this year, we've all been fundamentally wrong. And that keeps telling me that things are different now. And I know it's like that's going to be Opti's famous last words, like this time is different, but it is fundamentally different. And I think when you consider all the macro indicators, the global landscape right now, and the fact that investors do not want to hold traditional assets and they're kind of, moving away from treasuries, piling into gold, I think Bitcoin's going to have a huge run end of year. So I think Luke Gromen's completely right. We are seeing the fundamental monetary reordering in real time. And this can take a lot longer than we know, but it's happening as we speak. You're seeing the writing on the wall. These things are playing out, and it's not us just looking, reading between the lines and seeing things that isn't there. It's just like it's very obvious what's going on, but a lot of people are still asleep at the wheel, or they're still kind of working off an old paradigm. But we have Bitcoin now, so that fundamentally changes everything.
You cut yourself off there.
Dude, I'm so many moving parts right now.
You're so professional today, honestly. Like, I don't know how you're doing this. But yeah, what Luke Gromen said is, it's absolutely, it has so much logic behind it, though I'm not sure that is going to be the final chapter of this story. What we do yeah. What we do know that has happened so far is, they've printed money into oblivion to the point where, debt is no longer sustainable. In fact, the reality is that a lot of people our age are never going to see Social Security benefits. Retirement funds are essentially more than likely not going to be a thing in the future. And so what happens when the whole world depends on this currency? They're obviously going to look for other options. That was the objective of BRICS, for example. That's why they tried to make a new monetary system backed by gold and oil. But from a more practical perspective, those are assets that, sure, like they're rising, they're necessary in this economy. What is easier? What is more practical to handle as a currency? Like you said, we may use the dollar on a day-to-day basis just because it's something that we're used to. Who knows? Maybe the U.S. does end up using a stable coin, but the reality is that at some point inflation is going to take over the use of that currency. You're going to turn into a country like Venezuela where, to buy an ice cream, it was 500 bolivares. And like at some point you don't even know different way of exchanging currency. And the next wave of that is naturally a digital money. And the best digital money that there is Bitcoin. You're not going to want to transact in an altcoin whose value is different every single second of the day, because then you might as well be using dollars. You might as well still be on fiat. Eventually, a lot of the rest of the world is going to realize that. And my theory of the case is that once people realize how scarce it is, the accumulation race is going to begin on a retail level. And that's when we're going to finally see hyper-Bitcoinization come into play in terms of social adoption, global adoption.
Yeah, 100%. I think we are seeing a very interesting time going on right now where if you don't understand what's going on, you're definitely going to be left in the dust here. And this is why we come out here every day trying to explain what is happening from various different angles and always boiling it down to a very simple thought is you just need to have Bitcoin. It is no longer an option for you not to have Bitcoin. And if what a lot of Bitcoiners and macro guys have been saying for a long time, like the time is now. The next 5 years are going to be the most interesting time to be alive, like not just as a Bitcoiner, but I think as everyone around the world. And if you aren't preparing now for what is coming down the pipeline, for what they're telegraphing and projecting is going to happen, it's going to be a very, very bad existence for, the majority of people here, because they are definitely telling you what is going on. Things are changing. And they're trying to figure out a way that they can position themselves to kind of maintain their power. But with that comes the upside as an individual. If you do have some asymmetric understanding, if you do understand kind of what is going on in the monetary reordering and you do hold Bitcoin, I think it's going to be the best time for all of us here. Now, the real game for us Bitcoiners is just don't let go of your Bitcoin at this point. This is like the big thing going on. And I will cover this in the culture. I just remembered I skipped my conspiracy theory in the beginning because of all of the technical issues going on. But anyways, enough of that. We got an interesting dichotomy going on around conferences, fintech conferences, and then the Fed throwing a conference too. Yeah, and
that's crazy. Oh
and
my God, that's so
I wonder what they're going to talk about. Well, we have the kind of the index of the conference.
Well, the only thing I want to hear them talk about is when they're going to print money and how much of it, so that I can prepare
soon.
Financially.
A couple of days. We're going to know if they're going to cut rates. Anyways, guys, let's keep this moving because hopefully this stream doesn't die on me.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. Over 1,000 five-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledin.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's bitkey.world with the code SIMPLY.
Kind of. All right, guys. Here we have the lovely BitKey. It is so easy that even your grandmother can use it. I have my grandmother on this Bitcoin wallet, and you should get some. The holidays are coming up. There's no better way to orange pill your entire family than getting your family started on self-custody. The idea that they can just travel with their wealth in their pocket without anyone being able to take it away from them is powerful, and that is the best gift that you can give them this holiday. So use the promo code SIMPLY to get 20% off, right? 20% off?
Yeah, 20% off.
And yeah, cop this sexy thing.
Let's go. All right, man. Yo, today's show is awesome.
Wild.
I'm doing perspective of what people outside of our industry actually think about Bitcoin. Now, this first headline is from Yahoo Finance, and it goes, India bans crypto talk at world's largest fintech summit, and that silence says everything about its market strategy. And I think that is kind of the signal here, is that even though we as Bitcoiners understand Bitcoin's going to take over the world, and we're seeing the Larry Finks, Donald Trump's, the Japanese economy, the banks, sovereign wealth funds, the ETF launch, for the majority of people, they still kind of view Bitcoin as something that they don't want to talk about, something that they can ignore for as long as possible. But it's becoming very clear that the more they ignore it or the more they don't talk about it, that is the signal of what's going on right now. So everyone isn't embracing us yet, but the fact that they don't talk about Bitcoin now is really kind of the idea of like whatever you don't say, you're just omitting the truth, and that's the signal. So I'm going to show you this Reuters article about it, and I think it I think it definitely tells us a little more of what's going on. So India leaves crypto and stablecoins at the door in fintech jamboree. At the world's largest gathering for the financial tech sector in Mumbai this week, more than 800 speakers tiptoed around two topics that have captured attention globally: cryptocurrencies and stablecoins. About 100,000 participants converged for the three-day conference starting October 7 in India's financial capital, headlined by the prime ministers of India, the UK, and drawing regulators, investors, and industry executives from more than 100 countries. And it just kicked off when Bitcoin hit 125K, and India is leaning towards not creating legislation to regulate the sector, Reuters reported last month. And here is where you get to see what they wanted to and what they didn't want to talk about at this fintech conference. Obviously a huge stark divide from the conferences that Bitcoiners are creating now. But it goes, quote, please avoid political, crypto, religious, or personal remarks on stage or at the venue. Organized for the events, the Payments Council of India, National Payments Corporation of India, and the FinTech Convergence Council did not immediately respond to the request seeking comments. The warning highlights a contrast with other Asian economies and regions, such as, of course, Japan, Hong Kong, and Singapore, which have made efforts to establish themselves as regional hubs. Instead, regulators spotlighted India's central bank digital currency called the e-rupee, with the Reserve Bank of India launching pilots for deposit tokenization and a sandbox for fintechs. I think that is obviously the signal here, is they're like, hey, you guys can't talk about Bitcoin at all. Not even stable coins here, and we're not the biggest fan of stable coins, but they're like, you know what we will talk about? We'll talk about this e-rupee CBDC project that we're working on. But if you talk about Bitcoin,
which is totally not a crypto, right?
Well, it's not. It's a Microsoft
totally
Excel.
Not an altcoin.
Yeah, it's a Microsoft Excel worksheet. That's the real signal here. So look, even though I think Bitcoin is winning in the mind share around the world, I think Bitcoin is entering the mainstream kind of consciousness. People are starting to take it seriously from the highest levels. There is still a lot of pushback. Obviously, we've been covering what's going on in the EU. Now we're seeing it in India do something very similar. And though, the irony isn't lost on me that they both want to push a CBDC here. Anyways, here's another interesting kind of conference that is happening this week. And I'm over here on the federalreserve.gov, and the Fed is going to have a conference, and it is titled the Payments Innovation Conference. Again, they keep talking about the innovation of payments. Bitcoin isn't about the innovation of payments. It's about not getting debased. It's about holding something that they cannot destroy, that a man can't print out of thin air. It's what it's all about. It's all about not destroying our purchasing power. Anyways, I'm going to read this a little bit, and it goes, the Federal Reserve will host a conference on payments innovation, bringing together leading industry experts to share perspectives on the evolving landscape of money and payments. The Federal Reserve welcomes the opportunity to consider a broad range of perspectives on how to further innovate and improve the payment system. Again, I keep telling you guys we're seeing the same thing happen every time they talk about Bitcoin or CBDCs. It's all about payments, bro. It's like, we got to update the payments, bro. Payments innovation. This is just about payments, you know, and then that goes really into the why do I need Bitcoin if I can, just have PayPal? But whatever. Anyways, let's look at some of the agenda here. So tomorrow, Tuesday, October 21st, we have, opening remarks by Governor Christopher J. Waller. And then we have bridging traditional finance with the digital assets ecosystem with someone from Chainlink, Fireblocks, head of Treasury Service, and BNY, or head of Treasury Services and Deposit Receipts at BNY Mellon. So some bakers and some shitcoiners. And then we have stablecoin use cases and business models, moderated by Kasamani, who is a notorious shitcoiner. And then we have Paxos, Third Bank, Dollar App, and Circle. So a stablecoin in there with like a Bitcoin exchange. Okay. And then we have AI and payments with Kathy Wood. Okay. And then someone from Coinbase, someone from Stripe, and then Web3 Google Cloud. Okay. Sounds like a lot of shitcoiners. And then we have tokenized products with some bankers. BlackRock, of course, is there. They love tokenization. So I'm sure Kathy Wood will talk about Bitcoin. I'm sure maybe Coinbase will talk. This is about making sure that you have a good money that cannot be destroyed. Again, remember what was in the Genesis block. Chancellor on the brink of second bailout. This is all about money printing. This is all about expanding the money supply and destroying your savings, destroying your purchasing power. That's what Bitcoin fixes. The 21 million hard cap is the signal here. And they can never fight this because they're always thinking in terms where they're trying to gaslight you and be like, it's all about payments, bro. Like the Federal Reserve, or what's Chrissy Lagarde been saying about the CBDC?
We can already, like, the payments innovation already happened when PayPal and Venmo happened. Like, honestly, like, the second that Apple could do, like, that double tap pay on...
Dude, Apple double tap pay is the go. I'm not gonna lie.
Good. I love it. I can't wait to, like,
I'm not gonna lie.
But with
I use it
Bitcoin.
every day.
Yeah, it's great. It's so great. Like, what are we gonna do? Talk about that? You know, that the payments thing has already been done with. I really hope that Bitcoiners who are speaking at this conference have the gall to confront the Fed at their own event about the money printing situation and about the fact that, not only is it a money printing situation, but the ramifications of that, how printing money has made people poorer over time, how it's funded wars over time, and how it has generally been used for corruption on a global basis. Because that's what it leads to. Like, it's one thing to see numbers on a screen, but it's a whole other thing to see the actual like the real world consequences of that happening. And I really hope that somebody talks about that.
Kathy Wood, if you can hear us.
We're depending on you, girl.
We're depending on Kathy Wood.
This whole conference is on your shoulders.
Seriously.
Just no pressure, but,
Well, look, being a little more realistic, I'm sure they will touch on Bitcoin. Even like the shitcoiners and the stablecoin guys, I think they will at least loosely talk about Bitcoin, or maybe lump Bitcoin in with stablecoins and other cryptos. The only two real bets we have here is probably Kathy Wood and the lady from Coinbase. So Coinbase, I don't know. Brian Armstrong has been coming around a little more around Bitcoin. He has been saying a lot of things nicely about Bitcoin.
Wasn't he just in Congress saying that they're passing a markets?
Yeah. He said the market structure bill.
Yeah.
Market structure bill is probably coming soon. He has been saying that for a couple of weeks now, but we are seeing a lot of people, in the halls essentially say something similar, that's one thing they really want to push through. Obviously, the Genius Act got pushed through.
We're finally in the room, guys. Like, congrats to us.
Well, Yes.
We're in the rooms where the deals are being made. That doesn't guarantee that we're going to get anything passed. But hey, last administration, we were barred from those rooms.
Yeah, they literally tried to end our industry. So it is a good thing to see. Anyways, let's keep it moving because the end of this show is going to be some fun stuff. I've been watching. Shouts out to my boy Sal. He hit me to some Simon Dixon podcasts with Bitcoin Archive, and they were really good. They were called like BlackRock's evil plan to steal your Bitcoin or something like that. He's got a good tweet about it. But Nick Carter kind of highlighted a Galaxy report last week that did kind of go under the radar, and it really goes to what I think I've been saying the last couple of weeks is that, look, as much as we got all hyped about a strategic Bitcoin reserve, it's starting to look like it's not really a priority, nor does it necessarily need to be one, considering we do now fundamentally know what their budget neutral ways of acquiring Bitcoin are. So anyways, let's transition and we'll be right back. Oh,
I want to give a shout out to our partner, HIVE Digital Technology. Why HIVE in 2025? Unstoppable growth. As the first ever public miner, HIVE's position to quadruple their global footprint, making them one of the world's fastest growing miners in 2025. And with elite operations that consistently top the industry in Bitcoin mined per exahash, HIVE's now headquartered in the USA. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable Bitcoin mining. You can catch the latest buzz at HIVE Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only, private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank, and you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys, tap into home equity for long-term Bitcoin growth, and join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io, join today, where Bitcoin meets freedom.
okay, guys. yeah, this streaming with OBS is crazy right now. Anyways,
This is how they used to do it in the olden
this
days.
is how most people do it.
Yeah, this is the
it's
OG
just,
way.
You know, I'm learning in real time how to make this work, and it's not perfect yet, but I'll get it perfect for you
But it's
guys.
pretty good. If everyone's having a good time, smash the like button, share the show with your friends, turn the notifications on so you get alerted as to when we will be going live, although we're always late for the show. You want to check out our other shows.
We're on block time. We're on block time.
You want to check out our other shows.
We're on Latino time.
Yes.
when we start, guys. Anyways. So as I was telling you here, let me full screen myself real quick. As I was telling you guys, so I highly recommend you go watch Simon Dixon on Bitcoin Archives podcast. He did like a almost 3 hour pod. They were titled something on the lines of BlackRock's evil plan to steal your Bitcoin. And essentially, he makes a case that the U.S. government is essentially going to centralize the holdings of Bitcoin, or rather, BlackRock and all of these Bitcoin products are centralizing the custody of these Bitcoin, and then potentially they're just going to, you know, on one hand, either like a 6102, or that's just the way to essentially get a honeypot and try to get you to sell them your Bitcoin so that you can get gains. And as we saw last week, the U.S. government did confiscate 127,000 coins. Now, I know a lot of Bitcoiners, or maybe newer Bitcoiners, are like, or maybe skeptics who are thinking, I thought Bitcoin was unconfiscatable, bro. Well, if you secure it right, it is unconfiscatable. But if you don't, then obviously it could be easily stolen from you. So the U.S. government basically overnight added 127,000 coins. Allegedly, there was a whole saga around it. Remember, I covered it last week, and we still don't really know if the U.S. government holds the other 200,000 Bitcoin. But based on kind of the general idea here, it seems like the U.S. holds around 327,000 coins now. Anyways, just to give some context to that, this is really, I think, what I want to talk about here is this tweet from Nick Carter. Now, I know a lot of you guys may not like Nick Carter. I think he still does incredible work. He's quote tweeting this Galaxy research report that came out, I believe this was Friday, or it's the 18th Friday? The 18th Friday?
The 18th was
no, Saturday.
2 days ago.
Saturday. Yeah, Saturday.
Yeah, Saturday.
Okay, came out Saturday. Perfect. And it was titled, Uncle Sam's Bitcoin Pile Grows 64% Overnight. Now, I was literally mentioning something very similar last week that, hey, look, the institutions are here. We were asking for them to be in the Bitcoin space for a long time to kind of save our bags, pump our bags, bro, scoop up the bottoms, et cetera, et cetera. And I literally verbatim was saying this, be careful what we wish for, because if this is true that the 4-year cycle is broken because there's a new investor in the market, then that potentially means, no more fun, no more parabolic runs, and the Ponzi's over, bro. The Ponzi's over, but
we start a new era
with no bear markets.
Well, no, actually, I think this whole premise of like it's the end of bull runs and it's the end of cycles is like semi-faulty, because that gives the idea that like we're never going to pump up to ridiculous numbers again. And I just think that that's not true. I think the fact that we have absolute scarcity is just never going to let that happen. And the fact that not everybody has the privilege of, having their Bitcoin in self-custody. The fact that there are realistically few people that have Bitcoin in self-custody will basically mean that those who do have it will become the banks. We will be the people who give you the loans against Bitcoin.
Well, that's where the conversation essentially leads, that there is going to be like this 2-tiered Bitcoin system. Shouts out to Adam from Bitcoin Well. He keeps saying captured Bitcoin, and I really like that in kind of the context of ETFs, captured Bitcoin, the Wall Street banks or the national banks holding your Bitcoin so that you can get yield, captured Bitcoin, the Bitcoin in the BlackRock ETF, captured Bitcoin, the Bitcoin in strategy, potentially captured Bitcoin. And the only safe bet, considering we are going in extremely volatile times, is Bitcoin in safe custody. That is where you need to hold your Bitcoin. We're going to go into this 2-tiered system most likely, and I think it's playing out as we speak, where there's captured Bitcoin, where the middlemen kind of come back in, they try to centralize the control of Bitcoin, and then they give you, some gains on top of it. But the real place that you need to be, the real revolution, the real utility of Bitcoin is Bitcoin in self-custody. Now, that's we'll probably chat about that in a minute, but here is this, little highlight from the Galaxy report, which is titled, Careful What You Wish For. So the truth is, there's no urgency to establish any sort of reserve. The U.S. has nothing to lose by simply waiting. If Bitcoin continues to monetize and ultimately challenges gold and other nations adopt Bitcoin as part of their sovereign wealth funds, or even start to, quote, back their currencies with it, Bitcoin, the U.S. has plenty of time to act. U.S. institutions, investors, and individuals hold more Bitcoin than anyone else. The U.S. government has ample means to acquire Bitcoin at any point along the journey, should they decide that they really covet it. They could acquire Bitcoin via open market purchases, more likely, in Galaxy Research's opinion. I think this is Alex Thorne. They would go for the much cheaper option of setting a price cap, banning private ownership, and forcing conversion of U.S.-held Bitcoins as they did with gold in 1933, aka the Executive Order 6102. They could also simply expropriate the Bitcoins held on domestic platforms. U.S.-based custodians are the biggest by far. They could nationalize miners. They could hike capital gains taxes and insist they are paid in kind. They could arrest individuals known to hold a lot of Bitcoin and expropriate their funds. They could put resources into developing quantum computing good enough to steal the roughly 4 million coins that are quantum vulnerable. And then it goes, but wait, not like that. But that's the trouble. You don't get to decide the manner in which the U.S. government acquires Bitcoin. If you are successful at persuading them the virtues of Bitcoin and they really set their heart on a reserve, they'll do it through whatever means are most politically expedient. This is not necessarily consistent with what is best for the American citizens or American Bitcoiners. If it's a choice between buying 1 million Bitcoin at $1 million a coin for $1 trillion or simply confiscating 1 million coins through some other method, they will go for the more efficient method. And as we saw, I was saying this when the strategic Bitcoin reserve announcement kind of came out. And when Scott Bessent kind of came out and said we will accumulate Bitcoin, I found the wording very interesting because he said accumulate Bitcoin. Of course, they've been saying budget neutral ways of acquiring Bitcoin. And then slightly they snuck in like we can confiscate your Bitcoin. So it does look like that's where this is trending, which is obviously not what we want to see here as Bitcoiners. But again, be careful what you wish for. Now, this is where things get a little interesting, is essentially what Simon Dixon has been saying. He quote tweets this and he goes, the U.S. Bitcoin strategic reserve strategy isn't about buying Bitcoin. It's about seizing it and later selling it back to the financial industrial complex through auctions. BlackRock and other Wall Street nodes in the proof of weapons network will be controlling shareholders and debt holders of strategy. The financial industrial complex doesn't just want your Bitcoin. It wants to hold and leverage your Bitcoin too. Your mission, keep your Bitcoin in self-custody. Don't use their financial weapons of mass destruction disguised as products. Just follow the money. Now, this is where we constantly tell you guys, self-custody your Bitcoin. What we are seeing right now, I think is very obviously, I'm on board with Simon Dixon. I think what we are seeing right now is essentially a new phase, and he's not the only one saying this. I forget who was tweeting this over the weekend, but we have entered a new phase of Bitcoin adoption in the sense that we had in the early days, there was Bitcoin and then Ethereum came out and then the ICO craze came out. And that was just a, disguised way of stealing your Bitcoin. And then we got, the NFT kind of ordinals thing, another way to get your Bitcoin. Before that, we had the DeFi kind of degeneracy. And now the new product is these, Bitcoin exposure products, whether they're ETF, whether they're Bitcoin treasuries. And there's a huge headline. I forget where it was this weekend, but it was going around all over Twitter. Essentially, that people that bought Bitcoin treasuries have essentially lost like $17 billion right now. So you are starting to see that there is not necessarily a concerted effort to stop Bitcoin, but there is this effort to kind of centralize the control of Bitcoin. And remember that when BlackRock came out and said, hey, we're going to do this ETF, there was that one line that made all Bitcoiners kind of freak out and say, hey, look, we can choose whatever chain we want. And everyone's like, they're going to hard fork Bitcoin. Now it seems like we are in the then they fight you stage, but of course they, kind of play along, they tag along, they embrace you, but all at the same time,
if Bitcoin
trying to acquire
fails,
Bitcoin.
If Bitcoin fails, they fail too. So,
well, I don't know. I don't know if BlackRock will fail if Bitcoin fails.
I mean, they won't fail, but
they have a lot of assets.
They're best performing right now. BlackRock is incentivized to keep accumulating Bitcoin, and it's their best performing ETF right now. So, just in practical matters, I don't think that they would be so greedy. I want to believe that they've learned their lesson with the housing market. Maybe they haven't because they're measuring it in fiat. But I want to believe that whatever they think is good for the goose is good for the gander. And that if people are using Bitcoin, then that means that Bitcoin will be successful and that they can keep accumulating and being a huge holder or whatever and keep making their money.
Yeah, I mean, I've been saying something very similar. So I've been essentially saying that even though I don't trust BlackRock or the Larry Finks of the world or any bank or Wall Street, greed to fully be co-opted by Bitcoin and be aligned, completely in the Bitcoin ethos or be ideological Bitcoiners, I do agree with you on that front that they're not gonna slay the golden geese here. Like, they are incentivized to see.
It's too early for
yeah,
that.
exactly.
It's
That's what I was saying.
for that. What I think is, maybe in the future, when people are starting, like in 1 or 2 generations, let's say, people are reaching the end of their life, they're spending their Bitcoin because they want to live their life, leaving a little bit to their grandchildren, and then their grandchildren leave a little bit less to their grandchildren or their kids or whatever. You know how inheritances go. A lot of people squander it. Eventually, that's how I could see the government and these huge institutions just repeating the same cycle of the bank. However, if people are not buying that Bitcoin, then what assigns the value to it? You can't just base it off of pure scarcity. You have to base it off of like demand as well. And so they may hold some sort of, majority control, but they're going to have to share that majority control with other huge institutions and other governments and other people who, there are a lot of wealthy and powerful people out there in the world. It's not just one. So I think the notion that they would hard fork Bitcoin is very improbable.
I don't think they're going to do that.
I think that's extremely improbable. That they would soft 6102, like, okay, good luck confiscating your Bitcoin. Like, they can't put all of us in a box.
Well, that's the whole thing. So they don't have to confiscate your Bitcoin. All they have to do is incentivize you to give them your keys of that Bitcoin, and once it's in there, it's a black hole, and they won't have to give it back. That's kind of the whole idea.
Well, that's what I'm saying. Like, they can only do that 2 ways. They can do that by either paying you or putting you in jail, and they're not going to put everybody in jail like Bitcoin.
Hey, Sophie.
I don't think they're gonna do that.
Yo.
I think that is a very far stretch of the imagination. Am I not allowed to say that?
I don't. Yo, Sophie is crazy.
I'm just saying. It seems like too far of a rabbit hole and a conspiracy theory to me that the government would do something like that because it's not in their best interest. You get what I'm saying?
I don't know. It's in their best interest to take something very valuable from you.
It is in their best interest only if that thing is valuable to other people. They can't hoard it. They can't just hoard it all. And then, because it's like, okay, fine. If you take all the money in the world and nobody else can use it and you just get to do everything, like, what's the good in that? People are either going to find something else to trade in, and there's going to be like some new like version in 200 years of Bitcoin, or people are going to fight back. I just don't see it happening. It doesn't seem economically feasible from my perspective.
Well, the best way to fight back against this, guys,
Bitcoin into self-custody. Maybe get yourself a BitKey and put it into self-custody.
Yeah, 100%. All right, guys. I'm gonna wrap it up here because this stream software. I need to. Yeah. Anyways, guys. This was the Monday show, October 20th. I think it's episode 1357. I'm glad we got a stream going on for you guys. The stream was a little different because it seems like there's a AWS kind of outage going on. Our traditional stream software wasn't working, but at least I got the show going the first time doing it on OBS. we made it happen anyways. So
And to my last point, talking about self-custody, since we don't have the show outro, this show is brought to you by bitcoinwell.com, the only exchange where you can buy your Bitcoin and it goes straight into self-custody. They never rug you. They never hold your Bitcoin. It just goes straight to you from the exchange. So go on bitcoinwell.com/simply to sign up and find out more.